mic?
Okay, go.
I spy with my... Oh, it's not fair because I'm looking this way.
Don't look.
I spy with my little eye something blue.
Something blue. That.
Nope.
No?
Nope.
You have a guess? You have a guess?
No idea.
No? That?
Nope. Nope. This one's a little harder. Now I'm up here, right? It's a little bit harder.
Your water bottle.
Water bottle? No. That would have been really good. Yeah, it's always like the clothes, right?
Anybody have a guess? Something blue.
Do like one more.
Do you want to check your video? It's working or not?
My jeans.
I did. I checked it. Sorry?
My jeans.
My jeans? Nope. Sorry. It was on that video, there's like a blue, again, a Visa. Why am I picking credit cards? Why am I talking about...
Okay, ladies and gentlemen, welcome back to the FinTech stage. My name is Alexandra Topalian, and I would like to introduce our next workshop, an introductory course on automated tools for trading, alternative approaches to investing using bot trading in crypto markets. Please welcome Mr. Aaron Dishner, co-founder and lead instructor of the Better Traders, owner, YouTube channel, Moonin Papa. That's the name of the YouTube channel.
It is.
Okay. Moonin Papa, world-leading crypto bot trader.
Yes.
The floor is yours.
Thank you. Ooh, I like that epic music. That's good. We're all good? Awesome. So, hey everybody. Usually when I do these talks, I'm in my office, and there's a camera, and it's just me talking to a camera. Not that you freak me out, but this is just a little bit weird. So basically today, this is a live YouTube video. So I'm gonna walk you through kind of the stuff that I do on my YouTube channel. And just so you know, I've been doing YouTube since 2018, not that long, but I focus mainly on automated trading, bot trading. I focus on trading psychology, risk management, portfolio allocation. These are a lot of big words that can be kind of misunderstood. So my big thing is that when I teach things, I want to make sure that even if it's a really elevated concept, that I start from the bottom, and that way I can kind of fill in the gaps. I've also been teaching in a traditional classroom setting, a K through 12 school for the last 13 years. So I've learned a lot about different learning styles. I've learned a lot about instructional styles. So a lot of the things that I teach in my courses on thebettertraders.com is from an educational perspective. We don't just say we're an educational crypto company because it sounds good. We literally are, because I'm actually a real teacher. So before I get started, I would like to point out that today's presentation is sponsored by 3 Commas and OKX. So yay, thank you. So 3 Commas, if you didn't know about them, 3 Commas is an automated trading platform. This is the platform that I primarily use for all of my bot trading. OKX is a fantastic cryptocurrency exchange. They have lots of things going on. They have an amazing booth down there towards the block stage on the opposite side. Okay. So, of course, before I go any further, again, just like on YouTube, I have a disclaimer. So, I am not going to read this, but I'll just leave it up and just explain that I am not a financial advisor. I am just a teacher. So I'm teaching you things that I've learned over the years from an educational perspective. I'm not telling you what to buy. I'm not telling you what to do, but I'm presenting things that have worked for me. And essentially, that's what this is, except it's normal English. So it's all there. We good? Good. I'm not waiting for you. Okay. So today, we have 5 main points in today's presentation. These 5 main points encapsulate everything that I'm going to be talking about in today's workshop, but also in our courses. So essentially, we're looking at understanding the advantages of bots versus humans, compounding profits through automated trading. You can read the rest. I'm one of those guys that I don't like to read what's on the screen. It's kind of boring. You're all very educated. You can read. But these are the things that I'm going to talk about. Now, I'm not going to be pinpointing every single thing. I'm going to be sharing lots of information today. So I believe on your seats, you do have a notepad and a pen, conveniently so. So if you have questions, and as I'm talking, you're like, I want to know more about that, or you want to ask a question that's related to bot trading or just trading in general, please go ahead and write it down. Those are yours to keep and take home, okay? All right. So let's continue on our merry way. So why bot trading? So essentially, the reason why I like trading with bots is these 4 points up here. Bot trading helps save time. Bot trading is basically the fantastic and easy way for automatic accumulation. The bots don't care. They're just going to keep accumulating these small amounts over and over, kind of like a snowball effect, until that snowball turns into a mountain. And then, of course, bots are emotionless. The one thing that really saves me with bot trading is that it's not me making the decision to buy, to sell, all that stuff. I pre-program the bots, and all the settings execute things on the exchange on my behalf, but it's data-driven trading. It's not me going in and looking at Bitcoin going, oh, it's pumping, I'm gonna buy some. It's already pre-programmed to do it. It takes the emotions out. I think that's really, really awesome about bot trading. Okay, so let's break these down. So time savings. Essentially, bots are your 24/7, 365 trading team. The bots, you can make as many as you want or as few as you want, but you are only one person. You make your own decisions based off the information that you're gathering. But the cool thing about bots is that you can have them do lots of different things and work for you while you're working on your businesses, while you're on vacation, while you're standing on stage in front of the people in Dubai, even though this is my first time to Dubai. It's an amazing place. But the bots are even now running for me and they're making profits. This shirt is literally telling the truth. It's hilarious, but it's true. So that's one real benefit, is that I don't have to sit in front of my computer. I never ever at night in bed pull up CoinGecko or CoinMarketCap and scroll on my phone. I don't care, because I have the trading plan executing through the bots. Hi. He was real close to coming up. Surprise guest. Bots can also automatically manage your portfolio for you. That's something that is a little bit more advanced, but it is possible, where you can split up your portfolio in lots of little chunks, lots of slices of a pie, and when one goes up, it takes those profits and puts it into something else. Again, it's an interesting concept, but I'm not going to talk about it too much. But again, there are lots of possibilities. And again, that's one of the most exciting things about bot trading. So let's talk about accumulation. Bots can automatically accumulate, oh, sorry, these are my notes, so it's not caught up. So bots can automatically accumulate anything you want. So in a fictitious and very neat portfolio with half BTC, Ethereum, USDT, and then we have crypto trading dust for everyone that is actively trading, this is probably what your normal portfolio looks like, right? You just have stuff there and you're like, oh, this is great. And you want to accumulate things that you see value in, like Bitcoin, like Ethereum, maybe any Doge fans, yeah, or Elon Doge, or whatever, literally whatever you want. You can accumulate it with bots, so that way your portfolio can look more like this. And the beautiful thing is that you can use what you already have to accumulate. You don't have to sacrifice what you have. So actually what this pie should look like is that the BTC part, it looks smaller because over time, it hasn't lost its amount. You're just allocating that BTC, the USDT, whatever you want, to use that to trade and to build up your stack of Cardano, Doge, DOT, whatever you want. Another nice thing about bot trading is that it does have the ability to be super, I hate the word, but easy. There are one-click presets that are available on the 3 Commas apps. So all you do, you connect your exchange to this trading platform 3 Commas, and then you can go through the steps just like I should. That actually finished before I even said anything. So really all you do is you choose aggressive, moderate, conservative, how much of your funds you want to put into that bot, and then you start it. Now it sounds easy to start. Just because it's easy to start doesn't mean it's easy to maintain. The biggest pitfall that I've seen about people that use bots, and again, I've been doing this, at least teaching people professionally doing this now almost 3 years, is that people get really excited about bot trading. They think, wow, I have a 24/7 trading team, they're gonna work for me, I'm gonna make as many bots as I can. That is the worst decision that you can make. Less is more. I know this is a very cliche saying, but it rings true, especially for trading. Less is always more. And I'm gonna talk about that a lot as we keep going. But you can, from your phone, you can create bots, you can watch and manage your bot trades, you can interact with them, It's amazing and it's really convenient. And best of all, bots provide you emotionless trading. So I like this. I was trying to think of points, but I like this one right here. And I would use a clicker, or sorry, I would use a laser, but there are no lasers, I guess. So bots process trades, not emotions. One of the best benefits about bot trading is that the bots are not going to care if Jerome Powell did this or this. The bots aren't affected by the SEC, by unfortunate wars that are happening. They're not affected by all of the terrible things that are happening in the macro financial world. They don't care. And that's actually a huge benefit to bot trading, because you know what? Those moments when there's a lot of volatility and the market falls real quick, the bots can actually, well, not just make more trades, but they're going to be more profitable and more consistent and pop. The times where you would not want to be trading, the bots don't care, right? So they're just going to be running those programs, executing those trades, and more often than not, during times of volatility, my bots are way more profitable, way more. Okay, so let's get to the exciting stuff. I'm going to share several strategies, and again, if you have any questions, or I'm going to explain things, but this is a lot of content. So if you have questions, use that notepad. You can write down a thing. We're going to have a Q&A session at the very end of today's presentation, okay? All right, so we're going to be talking about 3 commas DCA bots. Does anybody know what DCA means? DCA, what does it mean? You were first. Oh, yeah, averaging is part of it. What is it officially? Yes. Dollar cost averaging. Ba-boom. I need a t-shirt cannon. Ready? Thanks, man. So dollar cost averaging is a really complicated word for essentially just buying more at regular intervals. Not even price-based, going up and down. Dollar cost averaging could be buying Bitcoin every Sunday. That's it. It's not necessarily about price action. It's just about being regular. So, my mind just went somewhere, and I'm not going to talk about being regular right now. So, DCA bots, in this sense, it's all about price action. So for dollar cost averaging, like buying Bitcoin here at about 19,300, where I think it is, if and when Bitcoin falls further, the bots can buy more and more and more and more. Or you can run a short bot. So yes, you can run bots that are going long, buy low, sell high, but you can also run a short bot that would sell high and buy back lower. So the same concepts apply in both directions, which I think I'm getting ahead of myself right now. Oh, no, that's actually an excellent segue, because that is literally my next slide. So bots, specifically DCA bots, are designed for trending markets. So a trending market means literally just gradually going up or gradually going down. That's really all a trending market is. Right now, is Bitcoin in a trending market? Yes? No? What do you think? It's flat. You think it's trending? Yes, yes, yes. Slow, right? Slow. So it's basically we're consolidating. It's in an accumulation zone, right? We're going sideways. So right now is not the best time to run a DCA bot on Bitcoin, in my opinion, and I'm not. So there are bots that take advantage, though, of sideways action like that, and I'm going to share those with you in a minute. But I want you to keep in mind that bots work great on trending markets, DCA bots, and bots are designed with negative price action in mind. Now, this is something that I've kind of coined, negative price action. It doesn't make sense. So think about it this way. The bots, the way that they're structured is this, and I think, I'm so good at this. I'm not even looking at my notes, and it's like the right thing. Okay, so these are actually screenshots of closed trades, and sometimes I'm going to use the word deal. So on the 3 Commas platform, they're trades for bots. They've separated it. So you can trade and make smart trades, but your bots have deals. They wanted to make a distinction in the terminology, but a deal essentially is the same thing as a trade. So I'm sorry if I keep going back and forth. You're like, what's his deal? But that's what I mean. A deal is a trade, okay? So the way that DCA bots work is essentially like this. And this is a long bot scenario. Again, buying low, selling high. So, Again, here and here, not the same. So right here you can see this is the chart for KNC, BTC, not KFC. I hope you ate because now you're hungry. So the base order is that 8780, okay? I want you to keep that in mind. What that means, that base order, it is the first, basically the first execution for that buy. So it's like the first trade. You're buying here. And the beautiful part about this is that this buy right here is not the last one. The whole point of this is that as the price goes down, you can see this is our base order, and now at a lower price, we have something called safety order number 1. Again, fancy words, but just for buying more at a lower price. So the safety order, quote unquote, is there because we're expecting that negative price action. So as a trader, if you bought KNC at this point, and you're sitting there and you're watching your trade, or you check on it the next day, you're probably feeling like you're an idiot, right? It's like, oh, good, I did it again. I bought this and now it's going lower. But here's the cool thing. As it falls down, it can even fall lower. So here's our second safety trade. First one is back here. Here's the first safety trade. Safety order 2 is right here. And notice this white, or not white, this yellow box right there says average buy price. Every time it buys more at a lower price like that, it's not only averaging down the buy price, but also the sell price. And this is the cool part, because once the price recovers, and it's never a guarantee that it does recover. We all got caught up in what happened to Luna, buying the dip on Luna. This is an amazing, wow, this is a really, it's below us. This is an amazing deal, right? There's no guarantee that it's gonna come back up. But I am very picky about the coins that I trade, the trading pairs that I use for bots, which I'll talk about soon. But lo and behold, the price action will shoot up because crypto is insanely volatile, which makes it really good for trading. Crypto is an emotionally rife and just an amazing place to be a trader. That's why I like crypto way more than stocks, way more than Forex, because of the volatility, and that makes for really good trading. So what happens is, averaging down the buy price like this, you can see it takes profit and it keeps going up higher. Note the price of the profit, 85.80. When we started this, it was like 87.80. And this is just a small difference. And you can configure the bot to have the safety trades be even lower. It's honestly up to you, okay? All right, I just lost my spot. Oh, good, okay. I think I'm okay on my notes, but let me just double check. So, what starts those bot deals? How did that trade start? Was I there in front of the computer going, now? No. So the whole purpose of the bots, that's this trading team, is that they're independent. You set them up, you program them to do something, to run, almost like an application, but they run automatically. So the only way to run automatically is they need something to tell them, go, start a new trade, start a new deal. Okay? So that's what we call in 3 commas a deal start condition. Again, a deal start condition. Deal is the same thing as a trade. A start condition is essentially a trigger. So a lot of you may use indicators like RSI, MACD, moving average crossovers, volume, maybe even the Ichimoku cloud, your own custom indicators. Those are all indicators, and those could all actually, I'll talk about soon, they can all trigger bots too. So you don't have to rely on traditional indicators. You can use your own indicators to start bot deals. There's a lot of options. There's a lot of freedom with this. So we at the Better Traders, we offer our own signals on 3 commas. These signals are free to use when you sign up to the platform. And you know what? I have this little thing that I've been coining lately called Crypto Cheapo. To be honest, I'm not a cheapskate, but I like to save money. And I like to help people save money too. So there is actually a great affiliate partnership with FTX and 3 commas, and I believe I'm probably speaking ahead of when it's going to happen, but OKX as well they're talking with 3 commas to do something similar, so that when you have your FTX exchange and you connect it to 3 commas, you can use the pro level features on this trading platform for free. So you save money there. And then you can use our signals, and we have about 13,000 subscribers right now for these free signals for free. You don't have to pay anything to get started. So it's a pretty good deal. So anyway, these Better Trader signals are very slow. They're very, what I would say, safe. and they're very conservative. When I got started with bot trading, I was using other signals that someone else had provided, and they were very interesting and very exciting, but a little bit too much excitement makes for not such good vibes. You start to feel a little bit frustrated because there's so many open trades. You get frustrated because it's like, I thought this was automated. So again, less is more. And that's the whole ethos behind these signals that I've created. So these signals have been running ever since November 2020. It'll be their second birthday, next month. So I made these signals intentionally for people that take our courses on bot trading because I wanted to provide something that is slow, safe, and conservative. So that means when you start a bot with these signals, they're going to be very boring. But bot trading should be a little bit boring. Bot trading you can have high frequency trading, but really it's not about that. It's about slow, steady repetition. Slowly growing that portfolio. If you're a very impatient person, you might not like bots at first, but your sleep is going to thank you. Okay, so I want to share some data with these about these signals. So the BTC bots, in about 2 years' time, again with basically, I'm going to say 99.5% completely autonomous. Like I'm not interacting at all. About 69% total BTC gains in 2 years. It's not bad. And the USDT is about 93%. It's not bad. So I know what you're thinking. Oh, I mean, Bitcoin since November 2020 till now, I mean, didn't it go all the way up? Yeah, it did. And if you bought Bitcoin in November 2020, guess what? We're right back where we started. So if you were holding that entire time, you had all that amazing gain and profit, but now all the drawdown. So you're at the same place where you started. But the signals, I mean, that's pretty amazing. And again, I want you to keep in mind, this isn't today. This isn't last month. This is over a 2-year period. It's a slow process. I want to share some more data with you. So on our site, and I talk about this in my courses and on YouTube. By the way, you can find me on YouTube, Moonin Papa. I should probably say that a lot. I don't self-advocate enough, but whatever. Let's just talk about the data. So I love looking at data. If you don't pay attention to the data, you miss out on so many opportunities. This is something that I learned a lot later. So what I do is I look at all of the closed trades and I start looking at them and analyzing the performance. And then I want to figure out, based on the base, safety 1, safety 2, I want to know the percentage, the general average percentage. So I'm sorry, it's quite small, but right here it says 59% of all of the bot trades close with that first little base trade. And if we go back some slides, let me just remind you, that's this one, the very first one. So with these signals, over half are going to close with this much. Now, one thing I didn't tell you, and this is going to be a little bit weird, okay? But I want you to understand this. The only way that DCA really works is if you follow the martingale system. So I don't remember the man's first name, but his last name is Martingale, and he's a very famous poker player in the United States in the 50s. And he used dollar cost averaging to get out of these holes that he would be in when he was playing. Now, I'm not drawing a direct correlation from gambling to trading. There is risk involved that's similar, but the math behind Martingale is amazing. So you're just doubling down every time. For those of you that are traditional traders, you probably want to shoot me right now, because why would you want to double down every time? Just wait, okay? I'll share why in a minute. So the way that this works, not only is it buying at lower prices, it's actually buying more. So on this first one right here, it's buying what I say, it's 1/7 of the total volume. So I'm not going to use crazy numbers. We're just going to use it up to number 7. And I don't have 7 fingers. So there you go. So this first one right here uses a total volume of 1/7. It's 1/7 of the total possible volume. When we add our next trade, we're going to multiply that one. So now we have a total of 3. The first one is 1, the next one is 2, so therefore it's 3. Are we all tracking? So what's going to be the next one right here? If we're going 1, 2, what's the next one? 8? Oh no, we're not doing a multiple like that. 4, boom. T-shirt cannon. That was a nice catch. What a nice throw. Thank you for telling me. I really need that affirmation. So we got 1, 2, 4. So in total, that's 7. So the benefit of this is that when we close in profit, when we use all of those, we actually make more profit. Because if we only close with the first one, that's only 1/7 of our total possible volume. Does that make sense? So in a way, this is actually very intelligent. A lot of you that trade, myself included, sometimes you say, well, I'll use this much. Like, I'll just put in this number. This makes sense. But really, you should be making these decisions when you trade based off of percentages of your account. My friend Garrett Soloway is an amazing trader. I hope you all can come by and visit us. By the way, our booth is somewhere over there. But he is a legendary 20-year veteran trader of stocks, Forex, commodities, and now he's doing crypto. But this is something he talks about a lot, is position sizing. Don't go all in on the first trade, just see what happens. And bots automatically do that. They take care of position sizing. So keeping that in mind, and now I have to hopefully not skip where I was. Yes, thank you. Okay, good. So looking at this, and we're gonna zoom in, there we go. So we know that over half the time, we're only generating profit based on 1/7 of our total volume. You tracking? Does this make sense? So when we see this, we want to beat the average. We don't want to see anything higher than this number, because if we see any of these trading pairs up here closing more than 59.5%, that means that we're not able to take advantage of making more profits. We want to be seeing way more numbers that beat this right here. We want to see numbers bigger than 24 and numbers bigger than 15, and we see some. But being proper data analysts, there we go. Like this one right here for USDT XRP, no good. Why? We only have 32 closed trades. That's not enough to make a decision off of. That is not enough data. So we gotta focus on anything over 100 or more. You see what I'm getting? This is syncing up with you? I don't do this stuff and take it lightly. I wanna make sure that I'm taking care of my portfolio, that I'm putting it to good use, okay? And by the way, on YouTube, I actually share all this data and the same stuff I'm talking to you about. It's a broken record. I say the same thing every month, and I talk about the signal performance and how it went and look at the market and all that kind of fun stuff. Okay, let me keep going. So, what's this one? Okay, so this is showing you the platform of 3 commas. This is the bot trading platform, okay? So I am purposely not showing a lot of this because admittedly it's a little bit complicated. There's a lot of stuff, and if you're not familiar with the platform, it's a little bit much. So what I want to help you focus on right now, I thought that looked good on my computer, but that's pretty weak. But right there, max active deals and base order size. I want you to look at those numbers, because those 2 numbers, when I add all of those safety trades, all the volume and stuff like that, it ends up with, and I can't jump up that high, I am not Shaquille O'Neal, although I am tall, it's about 69% of my total funds. Why am I not using 100%? Do I not trust my signals? Shouldn't you be using most of your account on this? I'm going to explain that. I'm not going to answer, but I want you to think about that. So, again, my philosophy is what? Less is more. If I have more trading pairs, and there are 10, it says 10 max active deals, as in 10 max available trades that the bot will open at any one time. So if I have those 10, then that means I have a wider fund distribution. My funds are more spread out, and then I have smaller profit potential. So thinking back to that percentage, for the base order, it was about 59%. So looking at 59% of them closing with the base order size, and this is a small amount, I'm only going to be making about 26 USDT per trade. This is chunk change. I know, for some of you, you're whales and you're listening to me, and I'm very grateful. But for me, when I was starting, this is normal. But you know what happens is that when you reinvest these profits and you're able to take some of those profits out of trading, buy Bitcoin, put it in a wallet, that's what you should be doing, then you reinvest the rest of them. This slowly starts to grow. But one way that you can do it is that if you reduce your max active deals, even in half, then you can increase your base order size, and that means less trading pairs, more concentrated distribution, and a larger profit potential. So instead of that 26 USDT, now it's 52. Now again, these are really small numbers, but they're based on this small account. So if you have a $100,000 account, you're able to potentially double your profit. Potentially, it depends. But it's smart. One other thing that I don't have in my notes, but it's hitting me right now, is that I have talked to so many people, like I said before, who got really excited with bots. They're like, I'm gonna make this one, I'm gonna make this one, I'm gonna start this one and this one and this one. And I've had people come to me and send me emails and send me messages saying, how do you handle 300 trades? Like, how do you get out of this situation? I say, I don't put myself in that situation to begin with. So again, what is more? Less is more. The reason why I have less funds being used, less open trades, is because that is manageable. No human can handle 500 open deals. Like, that is like, it's a nightmare. It's a literal nightmare. And have people come to me asking, well, what do I do? It's like, you have quite the predicament. So I understand as well, believe me, I understand that reducing the available number of trading pairs also exposes you. If you're only focusing on 5 trading pairs, then what? What if one of those goes south? Yes, you're at risk. So I completely understand the idea of spreading out your portfolio. But when it comes to bot trading, I'm not using my whole portfolio for bot trading. This is a strategy, one of them that I use. So I want to put those funds for bot trading to the best possible use. So I'm not going to play it conservative. I'm going to play it focusing on less, because less is more profit. Less is way more easier to manage. Is everybody tracking? Oh, thanks. That's why you were standing there and like, look at me, look at me. Sorry. Okay, so there is actually a lot more data, and I'm just kind of buzz through this. I don't want to spend a lot of time because there's more I want to share with you, and I have limited time. But every single month, I share a profit report, profit and loss report. So last month, September, the USDT bots with a fixed amount of 700, and again, this is a small baby account, and I'm not doing anything. It made 2% in 30 days, and that one up there, the BTC bot, made 4%. It fluctuates every single month. The market never repeats itself, so the profits will never repeat. So some months when things are bearish, profits are low, but that's pretty much to be expected. But there's a way that you can actually make more in those scenarios, and you can, this is basically what I'm saying, this is the baseline. Remember, if you're not adding all those trading pairs into your bot, you're reducing your exposure and you're ignoring the trading pairs that you know take longer to close, you don't want those, and you're focusing on the ones that use more of safety 1, safety 2. So you're focusing on the winners. Historically speaking, and looking at the data, you're focusing on the winners. So this is baseline, looking at everything. And this is, you should be able to beat this. Okay, so let's talk about my workflow. How do I decide when and what and blah, 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 blah to set up a bot? So a lot of you are here probably for this. You're wondering, okay, so this sounds amazing, but I'm still confused, and how do you even pick the pairs? How do you even set this up? So I want to kind of break this down. So the first thing I do is that I identify trading pairs that are great for bot trading. Not every trading pair is good for bot trading. At the beginning, I told you, Bitcoin is not trending. Therefore, it is a terrible candidate for a bot, at least for a DCA bot, because we want to focus on trends up or trends down for a DCA bot. So, thank you, animation. So when we're thinking about trading pairs, just picking OKX, they have 626 trading pairs available. Some exchanges have even more than that. Wow, this sounds really overwhelming. I know. So how do I find trading pairs? How do I pick what I want to accumulate? There are a couple of things that I want to share with you. One is about, I look at charts. That's kind of a given. If you like a project, you can set up a conservative bot and just accumulate Bitcoin long term. You can accumulate Ethereum long term. But if you want to generate more profits, these are 3 of the things that I look for. And we're talking about a long bot. Again, buying low, selling high, okay? So the first one is a slow uptrend. This is from January 2022 up until October. So this is the chart for Monero XMR against BTC. Note, it is not up and to the right only. I don't want to look at charts like that. They're not good. The reason why is because I want negative what? Remember that word? Negative price action. I want corrections. I want to see a pump and a drop, but I don't want to see it come lower. I want it to follow basically a moving average up higher. That's very attractive for a trending bot. It is because when you get these big moves up, maybe your bot might get stuck at the top, but as it comes down and it's still trending up, it will pop again, just like this did. Let me see, what do I got next? I like charts that oscillate. I actually have a background in music and like in producing and synthesis and stuff like that. So essentially an oscillating pattern is like a sine wave where it smoothly goes up and down. If only markets did this, we would all be rich and none of us would be sitting here because we would just buy here, sell here, buy here, sell here. But we want to look at charts that oscillate in a similar way because as long as it's doing a repetitive motion, it may not be the same amount of time. It may be longer, it may be shorter, but we want to see things that go up and down, even if it's very jagged, because of all of the negative price action, because our long bots are prepared with all those orders, and when it goes down, it averages down our take profit. So we make more profits with charts like this. And if you can find a chart with a slow uptrend and it's oscillating, you have a winner. Okay, one last thing. This is the chart for Atom or Cosmos BTC, and I want you to see the dates. 2021 until the current date. This is a 2-year period. Sometimes, gasp, it takes a long time to close a trade with bots. Sometimes you have to wait more than a day. That's normal. That is completely normal. The longest I've ever waited on a bot trade to close was 3 months. But that one trade ended up earning me 0.5 BTC, half a Bitcoin. And at the time it was like $25,000 or $30,000. It was one of the best trades I've ever made in my career. It was so satisfying. And you know what? I actually took profit too early because my emotions got in the way instead of letting the bot run. And I could have made a whole lot more. But one thing I've learned is contentment. I've learned to be satisfied with any amount of profit. I've learned to protect my portfolio at all costs. These are things that I talk about in my courses. These are things I talk about on YouTube. It's important to get your emotions in check. If you see green and you close in green, you've done a good job. Congrats. The worst thing you can do as a trader is to take profit in the green and then commiserate. Oh, it went up so much higher. Oh, I missed out on that. Don't do that to yourself. It robs the joy. It steals the joy out of that accomplishment of closing in profit. Because let's be honest, really successful traders only have to close in profit 51% of the time. And more often than not, I get stopped out if I'm doing swing trading. That's just normal. So when I get those profits, I'm celebrating. It's amazing. It's fantastic. Okay? Does that make sense? All right, so where are we now? Okay, step 2, strategy. Am I going to focus on a long bot, a short bot? And what about my profit currency? What about scalp or swing trading? There are lots of options, lots of things that I can decide on. So when we talk about the strategy, I want to show you this chart. It's hard to see, but it says Ripple, XRP against USDT Tether on OKX. This is the weekly chart. So this is 2020 January all the way until last week or so when I took the screenshot. In this period, XRP shot up in about 13 months, 1,000%. It was amazing. And after that, it fell 80% in about the same time, 13 months. So we're talking about strategy. We're talking about long or short. We're also talking about where do you take profit? And you do have a choice. You can actually choose on 3 commas if you want to take profit in the quote currency. And in this scenario, it would be USD or USDT or the base currency. Now this says BTC, but going back to the chart right here, that would be XRP. So I've thought a lot about this. What is the best way to actually do this? In my opinion, it would make the most sense to run a bot and take profit in XRP from about here. Why? Why would I want to take profit in XRP from here to there? Why? Anybody? Yeah. Here.
Your base currency is growing as well as you get profit.
Exactly. Your base currency, XRP, is growing in profit against USDT, so therefore it's becoming more valuable. If you accumulate, wait, I'm just going to go blah, 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 and I'll forget. Thank you. If you are taking profit in Ripple, not only are you making profits, but your account, your portfolio is going to balloon as XRP grows in value. It makes sense. So, vice versa, on the opposite side, right here, the red portion, where XRP fell 80% or so, it makes more sense to take profit not in XRP. Why? You can accumulate a falling token like this. You can accumulate XRP as it falls. But why would you want to accumulate more of something that's losing value over time? Maybe you're a long-term believer, and that's okay. Maybe you're part of the XRP army and you want to accumulate no matter what. You can. But if you're trying to protect your portfolio, do you want to switch? Okay. If you want to protect your portfolio, it makes way more sense to take profit in the stable coin. Because, well, kind of funny actually, the stable coin shouldn't be losing its value. But yeah, it's okay. I didn't plan on, that just hit real funny. Okay, so you would actually hedge your portfolio. You would hedge your holdings. So here's the cool thing with this bot. What it does is it sells what you have and it buys at a lower price. And you don't have to be on the futures market to do this. You can be on the spot market and hedge your portfolio, selling high, selling the same like 1,000 or whatever, 10,000, 100,000 XRP, buying the same amount at a discount over and over and over. So you end up with the same amount of XRP as you had at the top, except now you have 80% more USDT. You've saved your portfolio. You've hedged your holdings. So that way your portfolio has not experienced any drawdown. Is this clicking? Does this make sense? Good. All right, step 3, the deal start condition. I did talk about this a bit. So you have lots of options for what starts your bot. What is the trigger? What's the light switch that starts your bot for a trade? So there are lots of built-in signals like RSI, ultimate oscillator, money flow index. There's a trading view, strong buy, sell, strong sell, a lot of those signals, as well as soon as possible, ASAP, which I kind of like, to be honest. It's okay. Just holding a presentation. It's all right. So there are also free marketplace signals and paid. The paid ones, just because they're more expensive, doesn't mean they're better. And also a webhook. So a webhook is an amazing tool because as long as you have something that can send a post message via webhook, you can tell your 3 commas bot to do a variety of things, such as message for deal start signal, as in you set up like a trading view alert based on your own custom indicator. So when that indicator makes a signal to buy, trading view, you actually copy this message, you put it into trading view right here, and as soon as the price crosses whatever that line is, or if it's an indicator to buy or sell, or if it's volume or whatever you want, then it will tell 3 commas, their bot, start a deal, or stop a deal, or cancel my trades, or start trailing, or do a whole lot of options. Again, this is going to start to sound, by this point, it's a lot of information, and as a teacher, this is terrible. This type of teaching is really, really bad. There should be more like breakout groups and stuff, but it's a limited time. But I want you to understand that what I'm presenting to you are lots of different options, and not everybody is interested in complex things, and it doesn't have to be complex. One thing that I say to a lot of my students is that it's only as difficult as you make it to be. It actually doesn't have to be so hard. If you like to challenge yourself and you want to get very creative, you can. If you want to make it really simple, you can. So there's a lot of flexibility in that. Okay, What's next? Portfolio allocation, the 30% rule. If we think back, and I really want to go back, and I'm hoping that the next slide has it. No, it doesn't. Ugh. But when I had those bots on the 3 commas page, it said like 69.3% or something. I had all those funds, I had 10 max active trades, and I reduced it to 5, but the percentage didn't change because using less is more profit, right? But I asked you before, well, what should I do? Why am I not using 100% of my portfolio for this bot? Because it makes sense, right? More funds, more profit. It's true, to a degree. But what happens if the market does something like this? So this is a live trade that I had. This is Link BTC, and right here, right way up there, is my base order, then safety 1, safety 2. And what happened? The chart kept falling. This is about June. So what you can do is, of course, you can interrupt what the bot's doing. You can, what they call add funds. It's an additional safety trade. This is one of the dumbest screenshot choices ever, but this also shows that this is me physically doing this. This is me looking at the chart and going, oh, that's good. I do this, yay. So this is actually a terrible thing to do, because look, it would make way more sense to do it here, because I went 1, 2, 3, 4 more times. But I got impatient, my humanity got in the way, and that's okay, because look what happened. It actually closed way lower than the original trade, and because I'm using martingale, doubling down, 1, 2, 4, 8, in total, that's about 15 times my base order size. So I'm able to close, and notice the time, by the way. I want to point that out too. This is June 15th or so, and then we have, oh no, this is the June, this is August, September, yes, August, and then it closes here in September. It's about 3 weeks. But I'm able to close at a much lower price, 15 times more profit than usual. So I'm trying to show you that even if the market falls, you can escape out of these losing trades. I've escaped, I've closed out of these trades that have been down 60, 65, 70%. But it depends on the chart. I have to be patient. I'm not going to rush in to layer a trade. Notice that I actually placed this trade after the bounce because this to me was support. So I was like, oh, this is good. But even this is a terrible trade. I mean, it would have made more sense here. And putting it here means that that probably would have closed here or maybe even a lot sooner. Does that make sense? Okay. So the 30% rule means you have to keep 30% of your funds free, available. Don't touch it. Just leave it there for emergencies because you know what, in crypto, emergencies are kind of a normal thing. We have hacks, we have bad news, we have financial stress. Just keep some funds on the side just in case because it's gonna happen. I'm just gonna break it to you now. The next thing about this is like an addendum, is sub-accounts. Sub-accounts are such a godsend for bots. And I hope this will just play. I thought so. Let's see. No, go back. Can you play the little video? I'm so sorry. You have to just hit like that little play button. So, while he's doing that, yeah. No, in the middle. Go forward, and then right in the middle. Right in the middle. Oh, I want to drive the car so bad. There we go, thank you. All right, so a sub-account essentially is like all of you that use computers. If you use a Windows computer, you have a folder, and you can add a folder inside a folder, and inside a folder, inside a folder. So that's nesting. So essentially, you can nest your portfolio. You can break it up and distribute your funds across multiple sub-accounts. So I'm showing you in this video that you can create an API key for a sub-account on OKX, connect it to 3 commas, and that way you can allocate your funds, spread it across multiple sub-accounts to take advantage of compounding. One of the best things about bot trading is that it can automatically reinvest the profits into the next trade, so that your account will grow slowly. It's not going to be amazing right away, but it does take time. So sub-accounts are a great way for you to make this happen, because after you connect your account on OKX to 3 commas, you can create a bot just for that sub-account, just for a trading pair, and have it reinvest the profits every single time. It's a pretty clever trick. Okay. And lastly, start the bot and wait. So many people, when they start the bot, especially for our signals, remember my TBT signals, I talked about at the very beginning, they're very slow, they're very safe, in my opinion, and they're very conservative. When you press enable, start the bot, it's not going to start a trade. The bot is ready and open, willing to receive a signal coming through. That's all it means. It doesn't mean you press the money and then all of a sudden Bitcoins shoot out of your USB drives. That's not how it works. So when you start a bot, be patient and understand that the whole idea of using bots is it's a slow accumulation game. It's not fast, quick, like big pumps. It's not like that at all. So I just want to draw an illustration. I have nothing against hodling tokens that you believe in. I just want to show you a fictional illustration of what hodling looks like against bots. So when you hodl, and that is the blue line, we all know this. We see our portfolios. We're holding Bitcoin. I have a lot of Bitcoin off of an exchange. I don't want to mess with it. So I know when Bitcoin goes up, my portfolio goes up. But when Bitcoin goes down, even below my cost basis, my portfolio has drawdown. But the cool thing about bots, the green line, is that they're going to be slow and steady. No, it's not just the big rocket. It's not mooning. But what it even does too, right here, in June and July, it's actually flatlined. Sometimes I have 1 month, nothing happens. Typically in the bottom of the bear market. But that's okay. Because if I have the mindset where I'm patient and I'm going to trust and follow my trading plan, I'm okay. I can wait. Because remember, I waited 3 months for an excellent payday. It's worth the wait. So compounding, again, another visual, is that if you can reinvest your profits back into that sub account month over month, it's not going to look like any difference at all at first. Even the second or third month, it's not going to look like anything. But if you continually are able to reinvest your profits back into the bot to compound it, it's going to grow exponentially. I think you all know what I'm talking about. So let's keep going on. Now another strategy, grid bots. So I asked you, and I was asking about Bitcoin. If Bitcoin is a great chart right now against USDT for a DCA bot, no, because DCA bots favor trending markets up or down, and Bitcoin's been going sideways. But there are bots that do that. Grid bots take care of that. Essentially, it's a horizontal grid, and when the price goes up, it's selling. When it goes down, it buys, and it just repeats and goes over and over and over, just like that. This is a screenshot of a grid bot that had a lot of activity. Notice, this is a very fast time frame. So we're looking at 6 o'clock, 9 o'clock, midnight. So this is about, I think, the 15-minute time frame. All of these B's and S's, buy, sell, buy, sell, buy, sell. So when the price goes up, sell, 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 buy, sell, buy, sell. So these are great for sideways accumulation, great for tokens that are being intentionally suppressed by market manipulators. Not every chart is good for a grid bot. Just like not every chart is good for a DCA bot. So the charts that are really good for grid bots are ones that stay in that horizontal range. So this is just me showing off just a little bit. So I made this bot on October 4th, and the screenshot was taken. I didn't have a way to include a timestamp, but you can see the price of Bitcoin. It's definitely not there. So this is just 24 hours later. This made 1.82% return on my investment. That was a really good one, because of the activity. Where DCA bots can be kind of slow, like that grid bots, if there's a lot of excitement, a lot of volatility, but the price is being suppressed, it's gonna just go like that, like a really fast game ping pong. Those are the great charts that you wanna find for grid bots. Okay, now I wanna present some strategies and some tips and tools that we offer through thebettertraders.com. Some of these are free, some of these are paid, but this one is free. So volume matters a whole lot when it comes to bot trading. Everyone here, you have different portfolio sizes, you manage different size accounts. So volume matters a lot. You don't want to be a wall in the order book. You don't want your bot to have so much BTC or so much USDT trying to sell, because everyone that's trading manually is looking at that and going, oh, I'm going to cut you. And I'm going to cut you again, I'm going to cut you again, and it'll be harder because there's less liquidity. So in order to fight that, I made this indicator that automatically converts the volume, that built-in volume from TradingView, and it shows you the volume, not in the base currency, which is Bitcoin. It tells you what it is in USDT, the quote currency. This is huge because adding that 30-day moving average, so we're looking at 207 million-ish, a 30-day moving average of volume. As a bot trader, I typically don't want to exceed 1% of that. So you want to be where the volume is, just like in trading. You want to be where the most liquid exchanges, liquid trading pairs are. Makes sense, right? So the same thing goes for bot trading. So if I'm going to use a BTC USDT bot, I'm not going to choose OKX. As much as I appreciate them sponsoring me, I'm not. I'm going to use Binance because they have the most volume on this market. It's the truth. I want to be where the volume is because I can put more into my bots and I can make more profits. It just makes sense. Next. Oh, that was it. I forgot. So OKB, OKX's token against Ethereum. This is really powerful because if you like to trade on alternative markets like I do, like Ethereum, tokens, exchange tokens, things like that, then you can figure out, okay, I want to use Ethereum to buy OKB, but how much Ethereum can I actually use? Now you know. The 30-day moving average is about 359 Ethereum. I want to take 1% of that, so it's not that much. It's only 3.5 Ethereum. Again, not that much volume. All right, so we also have something called the DCA backtester. The DCA backtester is a strategy on TradingView. If you've ever used the strategy tester, it's amazing because you can backtest your trades, your ideas, and things like that. So we have emulated a 3 commas bot, put it on to TradingView, and now we can start to play around with these ideas because 3 commas does not provide back-tested information at all. So you have to just guess, which I did for a long time. So this is a great way for me to visually see, and what happens if I do this? What happens if I use this? This is a great way to really tweak and fine-tune your bots. I love using this thing. Okay, the TBO switch. The TBO switch is a hands-free automated trading strategy that uses the TBO indicator. The TBO indicator is our own indicator. It's a trend-based indicator. So what the TBO switch does is it works best on futures and low, like 2x, 3x. So when you get a signal to buy, to go long, it goes long using leverage. And then when it goes for a short, it switches to short. So it's always in a trade back and forth. Note that in times of like really tight price action like this, it hurts. There's chop. But we don't know when the chop's going to end. So when the chop does end, the bot's ready. It's positioned. So whether we go up or down, it's going to take that position, and you end up with a really nice trade. And it does beat buy and hold ROI. So thinking about Bitcoin against Tether, if I had bought and held Bitcoin on July 1st, 2021, held it until July 1st, 2022, during that period of time, yes, Bitcoin went up a whole lot. And yes, I would still be down. But the interesting thing is that when I use the TBO switch, I can actually beat it. This is the same time frame. Here's buy and hold, and that's my equity line. So this bot actually made 205% in the same period where Bitcoin was down 45% or something like that. It's hands-free. It's a pretty good deal. And this is a closed trade. I'm going to skip past that one. Okay, so I'm running out of time. So I want to also respect you, and if you have questions and you've been writing it down, I really want to get to you. So we talked about all this stuff. So I want to open this up now. If you have a question, if we have a microphone in the back, fantastic, great. Okay, so wrong way. Oh, the next steps. Sorry, man, you're great. You're fantastic, I got you. So if you really want to learn more about bot trading, I have 2 courses that I want to tell you about. So what I've talked to you about, it's a lot of information in a really short amount of time, and maybe you're still jet lagged, I get it. The courses that we have, you have lifetime access to the courses. It's like Netflix, you can watch it whenever you want. It comes with a course syllabus, comes with one-to-one coaching, comes with a ton of stuff, and all of our courses are actually 50% off this week. So if you like what I'm saying and you want more of this, the courses have a lot more information, and I talk way slower. So 15 minutes is a great course. It's not 15 minutes long. It's just a catchy title. It's actually 8.5 hours, 25 steps, a ton of content, okay? But if you want something more advanced, Mastering Passive Income is a great place to go. I go way deeper into DCA bots, way deeper into customizing what works for you. You get access to a private Discord server. You get a 6-month subscription to that TBO switch thing that I told you about. We want to help you. We want to help you survive, and we want to help you thrive at the same time. Okay, now questions. Okay. Yeah.
Hi.
Hi.
Oh, that was loud. Just wanted to check, how do you determine your exit point
Yes.
for a trade, and how do you feel about trying to pick a fixed profit level versus having a trailing stop loss?
So how do I feel about the first one again was about taking like when do you take profit?
How do you determine the level, whether
Yes. So so the TBT signals, they're all presets. They're all preset with the already set up take profit percentage. They're all scalping bots. They're taking just 1% profit. But you can use that DCA backtester to see, well, what happens if I increase it? How does this perform? How does this historically perform? So you can finesse the numbers. You can finesse the settings to see. But for me, as a bot trader, doing this for the last 3 years, honestly, things that are below 4% work way better. You can make a lot more, but it's going to be extremely slow. And again, you want to be able to close deals so that way you can reinvest and grow the portfolio faster. So 4% for me is the max. And the second question was about, so he asked a good question. What about if the chart is trending? Like that chart I had for KNC, BTC, after it took profit, it went way up higher. Our humanity wants us to like, oh, this is amazing. It's going up higher. Why would I want, I'm going to stop the bot. I'll take over now. I've done that so many times. And you know what happens? Or I go like this, and then it just flatlines, and then I forget about it. Even worse. 9 times out of 10, I don't interfere. I let the bots close, even if the chart continues. The reason why is because there's no guarantee of profit after that set point. If your bot is ready to take profit, most of the time I just let it do it. Because again, the whole point is not for me to hover over the bots and to check on my phone. I want it to run on its own. Yeah, good question. Again, I'll give you, oh, not this one. Gotta hurry. Okay, another question while I'm fiddling around with these OKX bags. Any other questions? Yeah, thank you. Anyone else? Yeah. Oh, wait.
What are the price for the 2 courses?
Yeah, I got one. I'm good. So the 15 Minutes to Financial Freedom is on sale. It's 50% off, so it's $150-ish US. And the Mastering Passive Income is a big jump because it's a lot of content and it's very advanced. So that one is half off of 2,500 US. So now it's $1,250. Yep. So if you're new to bot trading, there is literally no reason to take MPI. But if you have the time and you want to start working on bots and go really deep, really fast, then it's a good choice. But for people that are new to bot trading, you don't have to do it. The 15 minutes course is amazing. It's fine. Yes?
Does the bot support the future trading and spot both?
Yes, it does.
I had an initial experience with one of the bots in future trading. When the market goes up, the bot sometimes reverses the trade. The trend is going up, it sells, and it does reverses. So actually, it made a lot of losses, but it at the end of the day it is to cover up. But I never understood why it is going reverse, and I lost a lot of money with that bot.
Okay, you got 2 questions. Can the bots run on the spot market and the futures market? Yes. So the TBO switch really thrives on the futures market, but traditional DCA, dollar cost averaging like martingale, buying twice as much is bad when you're using high leverage, because every single time you buy more with leverage, with futures, it multiplies where your liquidation price is. So if we're doing long, it's going to bring it up. That's bad, because you don't want to be here, the price is falling, and your liquidation price is moving up. That's like getting closer and closer to the train tracks. It's a bad idea. So I don't use traditional dollar cost averaging, but I do use futures with my bots, and always with a stop loss. No questions about it, always. And the second question was about, oh, you were asking about what does it. So you're actually asking a question about deal start conditions. What's the trigger to start your bot deal? So you were having an unfortunate problem where your bots were flip-flopping. That's something that comes down to whatever you're choosing to start your bots. So I don't know what you're using, but the DCA backtester that I showed, you can actually use your own private or like subscription-based indicators on TradingView and put it into it to see how would this have worked with this setting, with that setting, all those things. I hope that answers your question. And oh, thank you, Teresa. All right, anyone else? Any other questions?
Yeah, hi.
Yes.
Excuse me here.
Oh, okay.
Yeah. I want to know.
Could you stand up? I'm
yeah.
so sorry.
So, do you only have only the dollar cost averaging bot, or it does something else also? Like,
Yeah.
if we are trading the spot market on a leverage, and we don't want to do dollar cost averaging because obviously it will suck a lot of liquidity. So, what is the other option if we don't want to do dollar cost averaging?
So you can use TradingView. If you want to use a TradingView alert, you can tell your bot from TradingView, start a trade, and you don't have to add safety trades. You don't have to do DCA.
Okay.
So that's that part. And then the second part of your question was?
No, this was the only question, but...
Okay. And the other types of bots, there are also grid bots.
Okay.
So grid bots are different. They're buying more, but they're buying at a lower price, but they're not necessarily buying more. It's just set up in a fixed grid. So when the price is going like this, the bots are using that, and they're going back and forth.
So does it support the MetaTrader, or it?
No, it does not support MetaTrader. You would have to connect OKX, Binance, FTX,
Okay.
the API key, 2-3 commas.
So it doesn't support Forex basically. You need to be only.
Wouldn't it be amazing if it did?
Yeah, I'm
I've
asking
told
you.
them, do it, and they're busy. They're not listening. So, but
Okay.
someone will eventually do this for Forex. I'm pretty
okay.
sure of that. Yeah.
Okay, great. Thank you.
Yep. And we
Yeah.
have time for one more question because we're almost out.
Yeah, so you were talking about 1% profits, right? So what's the time frame, or is that just set up by the user?
So yeah, it's not all the same. It's just the signals that I was showing before, they're focusing on 1% profits because it's a scalping bot, but it doesn't have to be. But I'll tell you that the scalping bots, where it's taking a really small amount of profit, those happen much faster, much more frequently. If you have a really large take profit, like 10%, 20%, you're going to be waiting a long time.
Yeah, but then, I mean, like, that's when you're talking about higher volume of investment, right? But when you're talking about low volume of investment, how does that, what?
That all comes down to volume, right? Like, how do you figure out which trading pairs to use, things like that. I personally stay away from small caps to a degree. It just depends on the chart, really, and how much you want to use your portfolio. You don't want to exceed the trading volume because you'll basically get outbid every single time and you won't get filled. So it's about looking at the data, looking at the volume, and then staying under that volume, under that threshold. Yeah, I'm sorry, I hope that helps answer. Yeah, that free indicator we have, the TBT base to quote volume indicator, it would be really good for you. Okay, that's it. I'm sorry, I'm a little bit over time. I really appreciate all of you listening to my boring voice talking about something a little bit confusing. So if you have further questions, please do come over to our booth. We're out that direction, just around the corner from Kitco. Yeah, and again, my name is Moonin Papa. Please, if you do like YouTube, you can subscribe to me there or follow me on Twitter. And I would love to also pass out some of these bags to you. So yeah, please come on up and say hello if you'd like to. And until next time, you know what to do. Stay awesome and stay in the green. Peace. Thanks.